Hello, today I want to talk to you about incomes. Let's get started. When we talk about incomes, we are referring to revenue and gains. Now let's look at the meaning of revenues. Now revenues are increases in economic benefits, and they normally arise in the course of the ordinary activities of the business enterprise. They include sales, they include fees, interest, dividend, royalties, and then rents. Now, what do we mean by sales? Now, sales are the proceeds you receive for selling a product. For example, maybe a mobile phone, a laptop, and so on, a physical product. The proceeds you receive for selling that is called sales. What about fees? Now, fees are the proceeds you receive for providing a service. Like if you're a consultant, maybe a psychologist, and you provide a service, or you are a doctor and you provide a service, what you receive will be classified as fees because you are a consultant. What about interest? Interest are returns on loans given by banks. So when you go to the bank and they give you loans, what you get on it is interest. Or maybe you have a fixed deposit investment in a bank, the returns they put on top of your investment will be interest. All those things are returns on investment called interest. What about dividends? Dividends are portions of profits after tax that are given by companies or entities to shareholders of those entities. So, for example, if you are a shareholder of a particular company and at the end of a given financial year, the company makes a profit, portions of those profits could be declared as dividends and they are shared in accordance with the number of shares you own in the company. What about royalties? Royalties are legally binding payments that continue for a period of time, and they are normally paid by parties called licensees to the owners of the license called licensor for the right to use things like natural resources or the right to use their intellectual properties like patents, copyrights, and trademarks. Okay, and they are normally there to ensure that creators, inventors, or owners receive compensation when their assets are used, sold, or produced. When we talk about rent, there are returns we get for renting investment properties. So if you own an accommodation and you rent it out as an office or a place where people can go and live for some time and pay you some money, the money you get is classified as rent. And all these kind of returns, sales, fees, interest, dividends, royalties, and rents fall under revenues. Now let's look at gains. Gains are increases in economic benefits that do not arise in the ordinary course of business. Okay, and they include profit on disposal of assets, favorable differences on exchange rates on assets and liabilities. Now, it is important we focus on do not arise in the ordinary course of business. This is very important because with the gains, you do not set up to be able to make gains. Your main reason for setting up the business is to make revenues. This one, that's the main reason you set up. But alongside your business, circumstances can arise where you can also make some profit. And some of those circumstances are maybe you bought a motor vehicle, you use it for some time, and at a certain point in time you feel you don't need it again, and then you sell it off. When you make a profit from that sale, we call it profit on disposal, this one, and that is classified as gains. And if you have an investment in a foreign exchange and there are movements in the foreign exchange such that you make profit when you exchange the money, that one too we classified it as gains because the main purpose of setting up your business is not to be making profit from exchanges, is to make revenue. So all these incomes are classified under gains. I hope this explanation helps. Thank you for watching my video. Bye.